Good evening, ladies and gentlemen. Thank you for being here. As usual, I'd request our CEO, Mr. Chandra, to give you an overview of the quarter, after which we'll take questions. So,
thank you, Pradipta. Good evening to all of you. Good evening. Everybody is very busy taking notes. Very happy to be here, and I want to start by wishing you all a wonderful 2014. And I'm here to report the Q3 numbers of this fiscal. And we have had an excellent quarter. And the top line numbers are, we have delivered revenues of 21,294 crores. And in rupee terms, it's about 1.5%. In CC terms, it's 2.1%. And in terms of dollar terms, it is 3% at $3,438,000,000. And our volumes for the quarter was 1.8%. And our realization improvement is 74 basis point, or pricing growth rather. 74. And we had an offshore movement of about 40 odd basis points. And that's how the 2.1 constant currency. And we had a huge improvement in net profit at 5,314 crores in IFRS, over 13% Q on Q and 50% on an annual basis. We have had an excellent quarter in terms of employee retention. The attrition is stable where it was. And the hiring target, we've increased it by additional 5,000. So we'll be ending the year at least with a gross addition of 55,000 people. The numbers are much better when you look at only the international revenues. We had indicated a couple of months ago that we will have a degrowth in India market. And the India market dropped by almost 9% on a sequential basis. So the international business grew by 3.8% in dollar terms. And the volumes on international business was up by 2.9%. And in terms of the markets, except the India market, every other markets grew. All our industries grew. And most of our service lines grew except the asset leverage solutions. Everything else grew on a sequential basis. And in terms of employee addition, is 14,663 people. And the total employee base is 290,713 people. The company executes exceptionally well. And the utilization is at 84.3% all-time high. And including trainees, again, it's at a very credible 77.5%. We have had a quarter of very high performance in terms of cash flow. Our cash flow performance this quarter is probably the best we have had in the recent times. And in summary, it's been a very good quarter, and the customer traction has been very good. We added more customers in different revenue bands, whether it's 1 million band, 10 million band, 20 million band, 50 million band. Across the board, we have had customer additions. And the deal flow has been pretty good. We have signed at least 8 large deals during the quarter, and a very, very good and healthy order book. Going forward, the initial indications for next fiscal year are very bright. So we believe that 2014-15 is going to be a much stronger year than the current one. So we are very positive and we are looking to the future very confidently. Thank you so much.
Okay, we'll take questions. First question from Ritu Singh, ET Now.
Hi Chandra and everyone else. Congratulations on a great set of numbers. Could I start by asking profit? Profit has come in much higher than expected. Could you explain this other income factor that drove bottom line?
Last quarter we had a foreign exchange loss of 377 crores, against which we have a 299 crore profit. So you got a swing of about 700 crores. And that's the primary one-off that is there. Otherwise, it's better operating profit flowing through. And you also have slightly higher interest earnings on our cash reserves. So it's the forex swing that's actually driving the net profit change.
Right. Could you also break up the impact on margins, why it's down? And especially given the fact that utilization is at an all-time high, it's gone up. Could you explain the margin figure?
See, the operating margin, if you really look at it, we have said that we want to operate around 27%. Right. And we want to be reinvesting the margin into sales. So last quarter itself, we had a 30.2% margin. This quarter, in fact, we had an operational improvement of additional 70 basis points. So all things being equal, we would have reported 30.9 as the margin. So what we did was to reinvest that 70 basis points into sales. So our sales investment is 70 basis points, which is the improvement in margin. The rupee strengthened this quarter, which had an impact of 46 basis points, which is reflected exactly in the drop in the margins, which is as per what we wanted to do.
Talking about rupee, you said that reflected in the margins. Going forward, given that the rupee is strengthening, what are the headwinds and tailwinds you see in terms of margins? I mean, can we expect you to close the year with a 30% plus margin? I know you do not give forward-looking statements, but...
So you asked the question, you answered it. But having said that, we have indicated to the market that we would be targeting around the 27% margin. Right. But we'll be doing much better than that. And with the right opportunity, we will invest. Just because we have question that we can't invest at random. So at the right opportunities, we'll invest and we will increase our sales investments, the type of deals that we do, etc. So that's a cushion that we have. But in terms of, and also it provides as a cushion for headwinds. So,
all right.
So we are comfortable with the same statement that we made before.
So domestic revenue, as you said, has declined, whereas international business has grown. But going forward with the elections and the general uncertainty in the domestic economy right now, do you expect that to significantly impact your revenues going forward in the next quarter, given the first few months are expected to remain weak in terms
So we have said that the domestic market will be uncertain until the June quarter, maybe till the September quarter, considering the election time. So we are not factoring in any major growth in the domestic market. There will be volatility, there can be some drops, some marginal growth. That's what is possible in the domestic market. So we are not expecting anything major in the domestic market for the next couple of quarters.
But given that it forms, correct me if I'm wrong, about 7% of your total revenue, do you see it having a significant impact on your top line?
No, we have said that when we make a statement saying that 2014-15 will be a better year than 2013-14, we take into account this.
Thanks, Ritu. Kritika Saxena, CNBC.
Chandra, pricing, if I'm correct, has seen a little bit of an uptick, and that's a trend that we've seen with your peers as well. Is this a sign of things to come? Can we assume that there would be a pricing uptick going ahead? And does this at all in any way change your pricing strategy?
No, I think you should not see it as a trend that we'll continuously see. I think we have largely seen the price seem to be stable for most of the normal type of business. Pricing uptick will happen as what we call as large scale engagements in the digital area picks up momentum. Discretionary spend is happening in the digital space. The number of engagements are on the increase. The size of the engagements are slowly increasing. As it picks up momentum, there will be opportunities for pricing uptake. Otherwise, I would be happy to operate in a very, very, very stable with a marginal uptake environment.
So this is everyone's favorite question around this time. This is the time when clients are deciding their budget, discretionary spending, etc. From the clients that you've talked to, specifically US, Europe, of course, what kind of an uptick are you seeing in budgets? And if you can quantify the kind of, because I remember last year you had given a sense of what kind of uptick, and in some areas there was a possible decline. Can you break it up for us, or can you quantify how significant is there an uptick? Because you have reiterated that FY15 will be better.
So I think there are basically 3 or 4 types of spend. There is definitely a significant spend that is continuing to happen in terms of simplification initiatives. When I say simplification, it means different things in the context of different companies. Could be rationalization of portfolios, rationalization of the IT infrastructure from not only from the cost perspective but also from a future perspective, what kind of a cloud infrastructure you want to have, etc. And shared services in the context of BPO. So there are lots of opportunities and lots of spend happening in that direction that will continue to be there. And that's where you will still continue to get large volume based deals. The second area where there is a spend that is happening with all our customer base across the board is digital. When I say digital, it's not just about building a few apps. It is starting to think holistically about what the combination of these technologies could mean. Mobility, cloud, social and big data analytics. The collective power of these technologies, what do they do to my front office? How do the channels should be thought about in a retail company or in a consumer product company, an insurance company? And the third area is the risk, regulatory, security, compliance, and those kind of area that's a spend. In all these 3 areas, there is spend that is happening. And we believe that the amount of addressable market for us, rather than talking about the spend, the amount of addressable spend that we are targeting is on the increase year on year, and definitely this year more than last year. And TCS is extremely well positioned to partner in the digital space, and we are already engaged with many customers. So I think our revenues will come from a combination of these 3.
Okay, Chandra, I want your outlook on volumes as well. Of course, there was pressure because of the India business. Over and above that, where do you see it going? Because I think last 3-4 quarters you have been outperforming substantially on volume. This quarter it is in line. For some analysts, it is slightly below. What is your outlook? I understand there is a seasonality factor. Even if you remove that, what is your outlook?
But if you really look at this quarter, the international volumes is exceptionally good. It's a 2.9%. Yeah. On a Q3, international volume 2.9% is very, very good. So I think we will continue to see a lot of volumes. So volume growth will be very key. And the pricing, I can't say, as I said, there will be a marginal, it will operate in a very narrow band, but there will be a lot of focus on volume driven growth. So you can see that we already up to our number this year. Yeah. And whatever number we announced for next year, we'll up it again next quarter. So early indications, because our utilization is already caught up at 84.34%. So we are likely to hire more people than we already indicated, but it's just that we don't have the numbers today. So
Ajay, there is no figure yet for 25,000 for FY15 for campus grads. No number yet for the lateral hiring, or will it be in line with what you had done last year? 50,000 was the number, I think, for FY14.
We said 50,000, and now what we are saying is it will be 55. We have just increased it by 5,000. And as far as next year is concerned, all we have said is campus hiring will be 25. And as far as laterals, or it's not really laterals, because that will also have fresh trainees from campuses, because we do that outside India as well. So the rest of it we have not announced. We have not announced the total number that we will do.
Ajay, this quarter is supposed to be seasonally weak. So I understand the utilization is supposed to be lower typically for this quarter. Your peers have seen that as well. But you've been able to maintain utilization, if I'm correct. What were the levers that you put in place for that?
Utilization for us in this quarter is probably the highest that we have ever
Exactly.
operated at.
Exactly.
It's last, I think, what I recollect was 83.8 to that 84.3 is where we are at this point in time. And it's a question of our efficient execution. So that is all that the whole thing ties down to. And including the trainees, if you look at it, 77.5, that's probably at the highest level that we have operated on, is because of the trainees that have been coming in, and we have been post-completion of training, that they are getting deployed into various engagements. So that is what is keeping the utilization levels very high.
Okay, Rajesh, last question. Rajesh, Chandra already gave a bit of a breakup on the margins. If you could just expand on that, what were the impacts on the margin? And also, Chandra spoke a bit on this, and if I could get your perspective as well. Last couple of quarters, you've been talking about reinvesting rupee benefits into the company. And I think in an analyst meet, you had also said that you will decide it in the next 2 to 3 quarters. Any clarity on that?
Absolutely. On the margin front, we have improved realizations and improved utilization, which contributed about 50 basis points improvement to our margins. Our offshore leverage, we were able to increase it, and that contributed about 15 basis points. So that's about a 65 basis point improvement from an operational efficiency perspective. On the SG&A side, all of this 65 bips was pretty much reinvested back on our SG&A side. And what we have ended with is a 42 basis point down, which is essentially accounted for by a 45 basis point drag on margin due to the currency. In terms of reinvestment, we stay committed to our target operating range of 26 to 28% margins, and we look for opportunities for reinvestment, and we calibrate that based on the certainty that we see both in the market as well as on the currency front. That policy remains unchanged.
Thank you.
Priya Sheth, Bloomberg TV.
Now that most of the questions have been asked, just wanted your perspective on what the deal rebid market for 2014 looks like, and what kind of pipeline are you seeing?
It's a very healthy pipeline, and I don't think that the deal rebid markets keeps changing year after year, because all this, there is a, depending on the market in which you have a presence you want to address, there is a certain number of contracts that end every year. So the rebid happens, especially long-term infrastructure contracts, long-term application management contracts, long-term BPO contracts, plus some companies which have not leveraged global shared services, trying to use this as an opportunity to drive efficiency. So these kind of contracts are coming in, and that happens every year, and it looks... See, the only thing is that because of the fact that we operate in more markets today than we operated before, and because we have experience of handling large number of clients and large scale deals, our ability to participate in these rebid contracts is increasing. So in 2014, we will participate in more such deals than we did a couple of years ago. That's the only way to look at it.
Okay, also on the US markets, it has been a bit slow for other peers as well in this quarter. So going forward, what kind of indications are you getting from the US market?
I think US market for this quarter on a constant currency basis is 2% plus for us, so which is not bad for Q3. So in Q3, I think there are 3 factors in a market like US. The retailers have the holiday season sale going, so absolutely there is no discretionary projects. Retailers are very focused on ensuring that operationally all the systems are agile and they are responsive to the holiday markets, holiday season. Second, the number of holidays in the US market for this season is high, and then the working days is less. Third thing that we have is furloughs, which affects manufacturing companies, high-tech companies, this time even some banks. So given that a 2% volume growth, 2% sequential growth on the US market is a very credible performance, so we don't see anything wrong with the US market. Extremely bullish about the US market. Extremely bullish about BFS as well.
Shruti from Financial Express.
Hi, and the first question is to actually Chandra. Wanted to ask on the outlook. You mentioned, companies increasing focus on digital space. So wanted to understand how significant And increasingly more significant will it be in terms of contribution to your revenues and profit?
Significant, very
Contribute.
significant, materially significant, both on the revenue and on the profit line. And digital business will run into few $1 billion in the next 2-3 years.
Okay, another thing is that telecom has done pretty well this quarter, few
It
quarters.
has been doing well for a few quarters now.
Yeah, but what is it going forward? What is the outlook? Expected to continue well?
We expect it to continue to grow.
Okay. Another thing is there was a lot of news about, growing closing of offices in US a few days because of the drop in temperature. Given that the season is usually a quarter of furloughs, so how has that affected TCS?
I mean, nothing material, and all our employees are safe. But nothing. I'm not going to say that because of that 20 basis points or 30 basis points is affected. No.
Okay, my next question is to, you actually wanted to understand what is the hedging policy at this point and what is the level that you hedge the rupee at in terms of dollar, since the rupee has started to appreciate now?
We don't give the hedge levels. That as a policy, we don't disclose that. Hedging policy remains normal. We hedge a couple of quarters forward and hedge receivables fully. There's no change to the policy.
But given the kind of current appreciation, have you changed anything in that front?
No change on the policy front, no.
Okay. Just last question to Ajay. Are you comfortable with the current utilization rate? Because you had once mentioned that 83 is the kind of level you're comfortable with, but.
No, we have said that the utilization level we can improve, and that is where we are. We are at 84.3. And given the overall mix of the projects that we are doing, I think it's a pretty comfortable range.
Now
But
that
as
we are at 84.3 is comfortable at 84.3. When we go to 85, we'll be comfortable at 85.
Okay. This is the level you're looking at, or you can go further?
If you're asking me whether it can go further up, probability is always there that yes, it can. It can. Yeah.
Okay. Yeah, that's it. Thanks.
I'm
saying can, I'm not saying will, so there's a difference.
Hi sir, in fact most of my questions are also answered, but still, since last
So can I ask you a question?
Yeah, please. So you're
So
talking.
what is your headline tomorrow?
Yeah, my headline will be today, sir. So basically, you're talking about digital stories since last NASSCOM, and so what I want to know is, have you seen the deals specifically for digital in last couple of quarters?
Absolutely. As I said very clearly, the number of deals in digital, I think I'll say it in 3 words. The number of customers engaging with us in digital and the number of deals with each customer and the size of the deal, all 3 are on the increase. I am absolutely bullish about the opportunity in the digital space. Huge opportunity, and it will be a driver of growth, driver of value, driver of thought leadership for us, and our ability to make an impact on customers. In all dimensions, it's going to be a big positive, and it will be for the next few years.
Can you by any chance tell how much is the contribution of digital in your total deal?
So anything we have not given out in the release or in the analyst deck, I won't say.
Okay. And so one more question on the election front. You already mentioned it by June, you don't see something major will happen till the election. But even after election, perhaps they will take long time. So don't you see this particular year is not good for a domestic revenue in terms of for the IT companies?
So as I said that as far as we are concerned, we are not assuming a significant growth in our plan in the domestic market until the September quarter. And my statements in terms of 2014-15 being a better year completely assumes that.
Zahra Khan, Mint.
Yeah, hi.
So how are you balancing the need to grow revenues in non-linear versus your manpower linked revenue, considering that your headcounts have been growing?
We are not trying to balance. We are trying to capture the opportunities. If the current business model is extremely attractive and our customers benefit and customers see a lot of value, we are going to continue to pursue the current business model to its full potential. And we are trying to develop the non-linear engines and we'll allow it to grow.
Okay.
So we're not trying to balance the portfolio and there is no such intent.
Okay.
And we would like to build the non-linear portfolio over a period of time.
Okay. I have one more question. In 2013, you were the biggest wealth creator, mainly because you are doing well and your immediate competition was not doing well. Now that the competition has started doing well, does that leave you in an uneasy spot in 2014 at all?
Why?
I'm asking you.
I don't feel any uneasiness at all.
Okay, thank you.
Beryl, DNA.
Hi, firstly just wanted a breakup vertical-wise and geography-wise, if you could just provide that.
So we've given you all the breakups.
I will give it to you
I don't want to
offline.
read it out. But basically, as I said, all markets except India have grown. All industries have grown. And all services except asset leverage solutions have delivered growth.
What about Europe?
Europe has done more than 5.5% growth.
But US is still doing better, right?
US has grown, this quarter US has grown little over 2%. Europe has grown more than 5%.
Okay, because I mean your peers have, there has been some issues in Europe, that's why I was asking about. And also wanted to ask you, what about growing competition with Infi? Any comments on that?
So I think, we are in a market where we are doing well and we compete with many companies on a daily basis. And our focus is on the customer and how we can continue to be relevant and continue to stay close and have the opportunity to learn and be relevant. We will continue to do that and that will continue to drive growth. So I can't really comment on a specific company because we compete with many people in many different deals. And we bid in the deals where we think that we can deliver value. And we'll continue to do that.
So you're not facing any additional pressure?
Yeah, please.
What is
I think that
pressure?
was asked and answered, Beryl. We'll move on. Srijiraj.
Hi, this is actually just 2 days ago there was a report by JP Morgan, the North American desk, where they were talking about a new trend emerging, which is insourcing and also consolidation. Consolidation has been there for some time. The thing that they were trying to flag was that there's a lot of risks associated with having lots of vendors and especially vendors out of India, smaller vendors out of India. So they said that in 2014, this trend is going to affect India-based players more than other players like IBM and all that. What is your comment on that?
As I said, I have to tell you everything based on what we see in the marketplace with our customer base. And we obviously study all trends and we take all those reports on board. But my commentary to you is based on what is in my pipeline, what is my customer telling me, and what is our order book. If you look at all of that, we are in a very strong position and our order book is very healthy, our pipeline is very healthy, our customers continue to encourage what we do, continue to partner with us. That's the only yardstick that I can go by.
And you see no declining trend or anything?
I don't see that.
One add-on question, not related to the same thing, but quarter on quarter, every quarter we keep tracking about how much is the utilization level, how much is the quarter on quarter revenue increase, 2%, 2.5%, 3%. When are we going to be in a situation where we can stop looking at, number of persons billed and all that, and we are at that product and whatever people call it, non-linear and all that. 5 years from now, what percentage of your revenue would come from?
I don't know. I really don't know. I think the business models will evolve, and the current business model with different variations continue to have a lot of traction with customers, and so we'll continue to follow that model. And we will build future business models, make investments, products, platforms, transaction-based pricing, non-linear models, etc. The other way to get there is that you stop asking us quarterly data. If you do that, it's easier.
Joshelle from ET.
Hello Chandra, congratulations on the results. I just have one question on the filing. It's now filing time for the next round of H1B visas. Have you seen, is there any pushback because of the immigration bill over there, or any considerations that you have seen because of the fines that some companies have had to pay because of visa irregularities, or is it business as usual in the H1B space?
So for H1B, I would say it's business as usual, because the filing happens somewhere around March, April. It's April first week when you do the filing. At this point in time, what is really happening is the H1B extensions and those kind of things, and those are going on as per track. So there is no specific issues that we are facing at this point in time. Yeah.
Shiv Priya from ET.
Hi Chandra, just wanted to check about this whole policy about reinvesting and sales. Has it become more critical now? And until recently, TCS had not outlined any particular margin where it would maintain it at, so you said 27%. So can you just, tell us like what really has changed in the marketplace and why you've taken this decision?
Shivpriya, on a lighter note, you disappeared from the scene for some time, so it looks new to you. Basically, we have said this 27% for the last 3 years or 4 years. So there is no change in policy. And we said 27%, we were operating at 27.5%, so we were not making the statement about reinvestment. When we went to 30%, then there was a lot of questions from people like you and from the analysts. Then we said, yes, we still remain at the same range. So whatever is the additional loan, we will look to reinvest. It is just an expectation setting.
So we can expect it to be at around 27%.
Yes.
Adit, Hindu Business Line.
Hi, my question was on asset leverage solutions. That seems to be the only drag on the performance this quarter. So what happened there, and is it also linked to your consulting revenues in some way?
No, it's not. Actually, consulting has done well this quarter, and enterprise solutions also have done well this quarter. I think the asset leverage solutions, you have to understand, is license and the project implementation based revenues. And in some quarters where many projects get completed, and immediately the additional projects don't start, the revenues will come down. But always it has been operating in a narrow range. In fact, last quarter it was the outperformer. So on a yearly basis, it always does extremely well. In some particular quarters, it really does extremely well, and some quarters it has a dip. So I think it will be unfair to call it as a drag, because last quarter it contributed more positively.
Okay, and is it also linked to the India business, because that's where you have so many turnkey projects?
No,
right?
not
at all.
Asset leverage is based on our own IPR, predominantly.
Ritu Singh, ET now.
Well, actually, my question's been answered.
Thank you.
Sorry.
I think we can finish.
Kritika Saxena, CNBC.
Chandra, you said 8 large deals. Can you quantify? I probably know your answer to this, but can you tell me all above $50 million, or can you break it up for me?
Yeah, all above $50 million.
Okay, what sectors and what geographies?
I think it's fairly well distributed. I think there is banking in there, there is retail there is media there, there is high tech there. So it's pretty distributed.
Okay, just a bit more, I'm sorry to repeat it, but a bit more on the India business. Safe to say that there was significant amount of pressure, and if not for the India business, you would have performed much better than what has come in right now. So just to understand, if September is the timeline that you're looking at, the other tough points have gone away, like telecom or high tech, they are performing fairly well now. What I want to understand, can you expect a pickup, or will it possibly be after September? Would it be just flattish? I mean, even if the pressure lifts,
Too far out. So many uncertainties.
but there's no uptick that you're seeing for sure for now.
Currently, we have not planned big uptick.
Okay.
It's volatile only for India.
It's only for India. It's see on the overall scheme of things, the size of the India business in our overall portfolio is not
It's
that
much
great,
smaller,
much
exactly.
smaller.
But there is
And
still
also-
pressure coming in. It is still
Also, if you
impacting
take the incremental revenues, it's actually much smaller. And this quarter there is a huge dip. So, as I've said, that what you need to take away and feel comfortable or otherwise is two statements. One is we have not factored in any big growth in the India business.
Okay. And you've taken into
And
consideration
we
the
have
pressure.
taken that into account and then said our growth for next year will be better than this year. And we see a very strong momentum.
Okay, fair enough. I'll leave that then. Chandra, you said the cash flow has been significant this quarter. Can you quantify that? Also, yes, Rajesh, the cash flow for the quarter.
Yes, so we have had a cash flow of about 5,400 crores and a cash position. So from that, we have spent about 750 crores on capex, distributed dividends of about 783 crores, and cash position has improved by about 3,750 crores. Our current cash and investment portfolio is at about 18,850 crores.
So you're sitting on a fairly heavy cash flow. So next 1 year, can we expect, I know the answer to this again, but still I'm trying my luck. Can we expect acquisition within this next 1 year, given the kind of cash flow that you're sitting on?
I think you should also bring some deals.
What do you say?
If you bring the right deals, yes.
Okay, done. Next time.
Aradhana from Reuters.
I'm sorry if I missed this. What was the total client addition for this quarter?
Just not reporting that number.
The total we don't report, now we report 1 million plus clients.
Okay. And Chandra, you said in your statement that 2014 is going to be better than 2013. Just in what terms? Revenue, client, budgets?
In every term. I think we are revenues. You mean the current year or the next year?
Next year, where you're referring to 2014 is going to be better than...
In terms of financial performance.
That's it?
No, I have a question.
Yeah, Zara.
Hi, coming back to acquisitions, can you give us a breakup of how much the last acquisition Altai contributed in the second and the Q2 and Q3?
We give it in the first quarter onwards. After that, we don't call it out.
No, not yet. Okay, fair enough.
Nothing significant.
Thank you very much, ladies and gentlemen. Please join us for a cup of coffee or tea outside. TVs, please come up with your booms and my... Right?